Good evening and welcome to the big story on NDTV Profit. I'm Nupur Talwar Suri. Now, even though economic indicators remain largely in the positive territory, there are signs that urban consumption may be seeing a bit of a slowdown. Weak Q2 data from FMCGs and a dip in auto sales seem to point to some cooling on demand. Now, on the big story this evening, we look at what's dragging down urban consumption and how soon can we see a recovery. To begin with, here is NDTV Profit's Harsh Saita giving us a broader overview of how things are looking.
Well, fears of a growth slowdown. Let's quickly pull up some numbers. Let's see how RBI views growth. They've not changed their growth forecast for FY25. 7.2% is what they've maintained as their growth, GDP growth forecast for FY25. But the IMF has also maintained a 7% growth forecast, but they're expecting the pent-up demand to start to get exhausted. This is a COVID pent-up demand that they are expecting could likely start getting exhausted going forward. 6.5% is what they are penciling in for FY26. Goldman Sachs expecting 6.5% for FY25. That's 40 basis points lower than consensus, so not really constructive. In fact, they've also lowered India's market weightage, and that's something that could be a concern. They're expecting growth and profits to slow down, and they're expecting a moderation in high-frequency indicators to start to reflect. They're seeing worsening earnings sentiment, and they're seeing an accelerating pace of EPS cuts going forward. Now, just in terms of what management commentary and what to kind of say, what does management commentary say about growth? Of course, H1 has been slow. That's been the clear indication. That's largely because of elections, heat waves, as well as a monsoon which has been unseasonal and erratic. The microfinance industry, all lenders suggesting, is in some bit of pain. And also there's some bit of pain on the personal finance front. Personal loans, especially on unsecured, rural, credit cards, all of that is seeing quite a bit of pain. I'm going to switch focus to the two-wheelers because it's a softer Q2 for both Bajaj as well as TVS. They suggested festive has not picked up as much, at least in the first 15 days of October. And they're expecting overall festive season to therefore be slower than what was expected earlier. So that doesn't bode well with regard to where growth is concerned. Let's talk about FMCG names. Nestle, they believe it's a challenging environment. Demand is muted. Higher commodity costs is keeping a lid on margins. Also, Tata Consumer Products, very similar. Cautious on volume recovery. They're cautiously optimistic is what they term it. And they believe that rising input costs and competition is obviously keeping a lid on growth as well as margins. Urban growth trending below, or rather slowing down, while there's a gradual recovery in rural. That's what HUL is saying. But certain monitorables that we must keep our eye out on. Rate cuts, if they are around the corner, could aid growth. H2 is likely to see a pickup because monsoons have been good and H1 was a large drag. So some amount of demand pushed to H2 likely. We'll have to wait and watch as to whether that happens. Plus we have the festive season. Whether that can really drive the uptick in H2, we'll have to wait and watch. But clearly concerns of growth visible.
All right. Now, in fact, it was the FMCG bellwether Hindustan Unilever Limited's CEO Rohit Java who spoke about urban demand dipping after the earnings announcement. Let's also listen into what he said and what it's indicative of.
The rural markets have been on the recovery path for some time and continue to recover gradually. And please note that it's about a third of our business comes from rural areas and 2/3 comes from urban areas. In the recent near term, we have seen a certain slowdown in the urban markets. They are continuing to grow, but the growth rate is trending down. And on the whole, therefore, the markets are slightly down compared to where they were, say, a few quarters back. Now, it's a near-term phenomenon, and it could be driven by various macro factors that could be short-term or long-term in nature. And where we come from, basically, is that we have to be very, very focused to go where the growth is. We have to be very, very focused on investing behind our brands and competitive capabilities, and also really keep consistent with our market development. And finally, we have to be very competitive, increase our competitiveness, and get stronger in every market condition.
All right, so that commentary now brings us to the three big questions we are asking this evening. Number one, is the urban middle class consumption story weakening? Is this a temporary blip, or are we likely to see a bit of a long-term impact? And finally, when can we expect a recovery? And joining me in the studio is Pallavi Nahata. Also joining us right now is Pushan Sharma. He's the Director of Research at CRISIL Market Intelligence and Analytics. Hi, Pushan. Thank you very much for being with us. Pushan, you've heard from Harsh. You've seen the commentary that came in from the HUL CEO. What's it looking like to you? The economic indicators do seem to be largely stable. So what do you attribute this sort of a blip that we see in urban demand versus, a fairly stable sort of and growing, maybe recovering demand in the rural areas?
So good evening to you and to all the viewers. So we've been seeing this, pan out over the last few quarters. In fact, about 3 to 4 quarters back, we were talking about a rural slowdown. And as the monsoon has recovered this year, rural is seeing some pickup. But if we zoom out a little and, talking about this weakening urban middle class consumption, this has been happening ever since the pandemic broke out. The upper sections of society, if you see, they remained economically protected and strong. They did not face job or salary cuts. Many saw, in fact, even superior increments. And that has reflected in healthy sales for discretionary products and services over the last 3 years. But if we double click on those discretionary products and services, what we see is that the premium categories have done much better. So if you see the automobile segment in fiscal 25, cars were about 50% above the pre-COVID levels, but two-wheelers were only about 1% above the levels, right? Above pre-COVID levels, that is fiscal 20. So clearly, a more expensive car is seeing a faster recovery than two-wheelers, which is a reflection of the upper segments and more economically strong segments doing better. The same is the story if you talk about, mobile phones. If you see the festival season, the mobile phones which are priced above 30,000 have performed much better than the entry-level mobile phones. Similar is the story with, say, two-wheelers. If you talk about the entry-level two-wheelers, they're about 6% down in H1 fiscal 25, whereas the executive and premium categories have grown by 24% and 5% in the same time. Now, all of this is largely because the stronger economic segments of the society, they have seen better performance through the pandemic in terms of their earnings as compared to the middle class and the entry-level segments.
In fact, Pushan, what you're saying resonates with what we've heard from the CMD of Nestle India, and we're going to play out that quote plate for our viewers in just a bit. Madhvi Arora also joining us. Madhvi, good evening. Good to see you. I think first, let's go across to Pallavi, who has a question for Pushan. And then Madhvi, of course, will come to you in a second.
Right. So, Pushan, coming back to you, I do want to understand, since you track the agri basket so closely, we have seen varied trends across the agri basket, and we have seen almost a near persistent rise in several agri commodities over the course of possibly over an year. So, how much of a dent do you think that's made, especially to the urban middle class that we're focusing our discussion on today?
So there are two parts, to this. One is the commodity price rise and the impact that it has on the consuming class. On the commodity price rise, there is a lot of seasonality. So, we see tomato typically tends to rise every July and August. Onion does that around end September, October. So we're seeing those pan out. But the persistence of these events has increased and the frequency has increased. And that's because we're seeing more incidences of volatility in rainfall and higher temperatures, which is impacting sensitive crops, mostly on fruits and vegetables side. But this is clearly having a bearing on the middle class more so than the more affluent class, because their food is a larger share of consumption in terms of the overall expenses for the middle class as compared to the richer segments.
All right, Madhvi. What we've been hearing for the past few months at least is that the premium segments are continuing to do well. So essentially, what it means is that we are seeing a growth in the upper categories, but the middle class, we are, the kind of commentary that we are getting seems to suggest that it could be shrinking. And, you know, that's a comment that also came in from Suresh Narayan, the CMD of Nestle India. We're just going to put out that quote plate for you, where he seems to suggest that the middle class of the country seems to be shrinking. Now, how do you see this in the larger perspective?
Hi, Nupur. So, see what happened post-pandemic in the early part of post-pandemic recovery was that there was a very clear K-shaped story that played out, wherein the premium segment did really well, and the lower strata was struggling, while the upper middle class were also sort of trying to find their base. As we move towards a deeper consumption story post-pandemic, what we saw was that the upper middle class also joined suit with the premium class, which was basically led by much higher income in the upper income strata. Again, helped by the fact that IT, BFSI were hiring massively and paying very well, which is now sort of fading over the past 1 year or so. The which headcount has been coming off. Even companies, urban listed companies, wages costs have also been coming off over the last 1 year or so. They're now in single digit, which basically means that on a real basis, the wages are going even sub 4% or so. That basically is now implying that within the urban sector, what you're seeing is that there is, another K-shape which is playing out, where the premium segment is still doing well owing to the wealth effect in the asset classes. But the upper middle class segment, which was sort of the bellwether of the second leg of consumption story in India post-COVID, is now starting to fade. Which is what our fear was as well, and that is why we've not been too gung-ho about the consumption story. Now, with regard to the rural sector as well, there's been a lot of noise about the cyclical recovery that is probably playing out, after the harvest, which has been the case every time there's a harvest season that comes and people start getting very gung-ho about the rural sector. Just to note, the agriculture bit is only 20-25% of the rural gross value add, and 75% plus is basically non-agriculture. So that segment has to still grow in a consistent fashion. We are seeing some improvement in that segment as well, but the rural overall income has been still low, and the terms of trade have not been too favorable. So, the upper middle class of the urban segment and the rural non-agriculture economy are basically somewhere in the struggle zone as of now. Rural is not a stress factor for me, but it's definitely not a very exciting segment wherein we're looking at a consumption-led, pickup. Urban, on the other hand, as everybody's saying, the premium segment is doing well, but the middle, income or the upper middle class income is where you are going to be seeing the struggle coming, because you are seeing the urban wages coming off, urban employment also coming off in that segment.
Okay, so Madhavi, staying with you, you did briefly touch upon the urban wage growth story. For the longest time, we spoke about rural wage growth not sort of keeping up, especially given what rural inflation levels were the last couple of years. Now, currently coming to the urban space, what's the wage dynamic there like? The data also is a little more scant, harder to come by there. But what's sort of the picture that's adding up there?
So if you look at certain urban segment data which we sort of track, as my co-panelist talking about with regard to the PV sales, how the premium versus non-premium segment is playing out. Also, since we track the listed companies, the details of their financials, that also is showing that the wage component is now coming off from the highs of 12-13%. It is again led by sectors where you saw massive hiring, which is IT and BFSI. So that I think is probably one segment to sort of see to understand where the urban story is playing out. But within urban, as I said, if you look at the the real estate segment, again the premium segments are doing very well, but the mid segment is now starting to see lesser excitement. In the car segment, the same thing is there. So those 2 or 3 parameters you can always sort of talk about, and within the consumer durable segments also, you're not seeing some excitement that probably was seen post COVID in the last 2 or 3 years.
So, Madhvi, we're just going to come back to both of you in a bit. We want to look at the sentiment that we're getting on the ground to get a better understanding of what's playing out. So let's quickly play out two reports that have come in from, I think, Delhi and Mumbai.
Nearly all FMCG companies and their managements have made an observation that urban demand is slowing down. We've spoken to a dozen of people, including homemakers, salaried employees and teenagers, that are feeling the pinch of the rise in food items such as snacks, biscuits and chocolates.
खाली महंगाई बढ़ रहा है, but इनकम नहीं बढ़ रहा है, वो बढ़ना चाहिए। तो तभी तो दे पाएंगे ना, ये सब ले पाएंगे।
कमाने वाला भी एक जन रहता है तो उसके ऊपर डिपेंड करना पड़ता है हम लोग को।
डायपर जो नॉर्मली बच्चों को दिन में 10 या 12 यूज़ कर सकते हैं वो भी महंगा है, तो हम लोग क्या यूज़ करें।
तो जो ऑयल पहले 122 या 130 था, तो अभी यहाँ पे अभी 160 170 हो गया है। दूध पहले क्या 50-55 था, आज 70 रुपीस हो गया है।
पहले से तो ज़्यादा मैं तो कम पगार कमाता था ना, उसमें पैसा बचता था मेरा, लेकिन अब उससे डबल कमाता हूँ तो डबल खर्चा आ जाता है मेरा, उल्टा कर्जा हो जा रहा है।
एवरीथिंग डिपेंड्स ऑन पेट्रोल, जस्ट वेजिटेबल्स तो देखने का दिल ही नहीं करता है। 25 रुपीस 30 रुपीस, हाउ कैन यू डू दैट?
The urban middle class in India is facing a financial squeeze that is hard to ignore any longer. It's a vicious cycle where the desire to maintain a comfortable lifestyle is being sabotaged by rising costs. At NDTV Profit, we have spoken to a few consumers and learned that people aren't making more money and wages are stagnant. This imbalance has left many feeling to be trapped in a cycle of debts. Let's hear it out from them about their struggles.
क्या खरीदना क्या नहीं खरीदना समझ में नहीं आ रही। घर की पुताई करनी है, घर के सामान लेना है, मिठाई लेने, पड़ोसी को देना है, क्या ले क्या नहीं ले समझ में नहीं आ रही।
अनफॉर्चुनेटली जो है इनकम नहीं बढ़ रही है और महंगाई तो सब बढ़ ही रही है, तो इस चीज़ के लिए गवर्नमेंट को जरूर देखना चाहिए।
जो 5000 का गुजारा होता था पहले, 10 साल पहले हो जाता था, पूरा घर में सामान साग सब्जी राशन पानी सब फिट हो जाता था। अब तो 500 भी ले जाएगा तो थैला भी नहीं भरता सब्जी का।
आजकल तो इंटरेस्ट ऐसे लेते हैं कि लाख आपको मतलब भरना इम्पॉसिबल होता है उस सैलरी में, और बस वही सब है कि लाइक जिस तरह से EMI हमसे लिए जाते हैं इंटरेस्ट के तौर पे, उस हिसाब से लाइक आज के टाइम पे सैलरी नहीं बढ़ती।
I have two growing kids. Their annual fees is definitely going up. Your diesel, your petrol charges are going up. Basically, living a daily livelihood is becoming expensive.
Previously, we were using the common products which were more available here, but now because of the social media attractions and all, the more premium products have coming into the market, and we have to use it and identify it. So the consumption has increased. In the cost wise also, we are using a premium products as well.
The purchasing capacity has increased for everybody, no matter whether your salary is high or low, but purchasing capacity has increased significantly.
Groceries is like they are like normal expenses like we do every month. And like last year, I mean, like we were in work from home, so the spends was obviously less. So since we have moved to Bangalore, the cost has been increased comparatively in native.
All right, so that's the word on the street, and we've looked at tier 1 cities, that is, of course, Delhi, Mumbai and Bangalore. I'm going to come back to you, Pushan. What are the ways forward now? Is it, would you look perhaps at a policy easing to maybe aid recovery, because it does seem quite clear that there seems to be a sort of a distress, at least in the urban middle class.
Right. Clearly, in terms of the middle class segment, there is a need for more cash in the hand of the consumers. That is something that could propel demand. So that's one side on the policy side. But on the other side, if you look at how the monsoon has been this year, we're at about 8% higher than normal. Last year, we were at 6% lower than normal. So the reservoir levels are in a much better condition than they were last year. The upcoming winter cropping season, that is the Rabi season, is expected to be strong. So if crop prices are supportive, rural India will continue doing well, and that could lead to better fortunes for FMCG companies. One is more cash in the hand of the consumers. Monsoon already has played out better. And if there is some support on the interest rate as well, both globally as well as in India, things could look up in the subsequent quarters. But we don't see the easing happening very soon, though.
Madhvi, if I could put the same question to you before, Pallavi comes into this. Is this perhaps, the stage may now be set for some sort of a policy easing, at least, we've seen central banks across the world now take that path. So would you say that maybe in India, that story is also playing out now?
So, well, for immediate consumption uptick, monetary policy may not be the best lever, right? It has to be fiscal. And to be very fair, state governments are already slipping on their fiscal targets this year, most likely. But their stimulus is largely focused on a lower strata of the economy, right? They're trying to sort of help the lowest leg of the consumption story and not necessarily the urban middle class. So that, I think, is more a story of how the private sector overall, decides to sort of manage their margins and how they really decide to actually, cut their cost in terms of wages or decide to, increase their employment overall. I think to a large extent that is dependent on them. From the policy point of view, I think fiscal, I don't think the policymakers are really focusing way too much on the consumption story, except for the state governments at this point in time because of the state elections are lined up. But Central on a broader basis, I think are largely focusing on the industrial policy rather than the consumption policy, and that may still continue. The core inflation in the last 1.5 to 2 years has actually been quite subdued, which has anyway been signaling the fact that we are somewhere seeing a subpar growth story in India, which is probably going to continue. Policy stimulus from the rate cut point of view, yes, will come because you are seeing the global change in winds. So that is also now sort of questionable. But in a way, the US economy has rebounded post the Federal Reserve cut. So we'll see how deep the rate cuts globally are going to be and how deep they are going to be back home as well. But clearly, policymakers, in fact, if you look at the RBI's own stance, they were very uncomfortable with the unsecured lending growth that we saw over the last 1 year. There's been a policy-conscious effort to tighten those unsecured loan and consumption-led loan growth that we were seeing in the last 1 year. So I think policymakers have taken steps to sort of tighten those lending behavior as well. And fiscal on the central side has been very clearly focused on industrial policy than on consumption policy. And that may not change, I think. So we are probably going to be seeing private consumption and private investment being the missing links in this growth story this year as well.
Right. So, Madhavi, given the factors that you've laid out, I do want to understand, I mean, it almost appears that there is not much reason to expect some sort of a significant sort of uptick, at least when it comes to urban consumption, especially in case of the middle class. So, you did say that, this year at least there's not much that's expected to change. But even going forward, in terms of what the current economic picture looks like, it does appear that we don't have too many reasons to expect any major uptick. Is that right?
Possibly, yeah. So I think the labor market dynamics will play a very important role. Like in the end, your income effect has to somewhere reflect into consumption effect. If that is going to stay a little bit, uncomfortable or a little bit dicey, you will see the consumption effect also playing out in the same way. So I think a large part of it will be depending on how the labor market dynamics play out. So sectors like, say, IT, again, it is pretty much a function of how the global growth, turns out to be in the next 1 year or so. We may not expect a recession in the US, but definitely we are looking at a slower growth story in the West in the next 1 year. Possibly fiscal could take a different turn and, we may actually not see much of a slowdown, but if that happens, again, this sector, which has been a bellwether of the urban middle class, the urban upper middle class, would be massively hit, is what I feel. So we'll have to see how the labor market dynamics really play out, because that's sort of something that, to a large extent, government also may not be able to do much in the immediate run, especially in the private sector.
Right, so it's going to be a wait and watch game is what we seem to be picking up. Bhushan as well as Madhvi, thank you both of you very much for joining us on The Big Story this evening.
Thank you.
Right, and in fact, we also have a report that came in from Tushar, who visited a Honda showroom and spoke to Vivek Jain, who's the owner of the showroom. Now, this again is looking at how demand is playing out in the festive season. Remember, there are a lot of hopes attached that it will pick up now.
हर साल की तरह दशहरा दिवाली जैसा था वैसा फ्लैट ही है, बट सेंटिमेंट्स चेंज हुए हैं. ओवरऑल टू व्हीलर मार्केट भले सेम है, बट हीरो, क्योंकि आप हीरो की डीलरशिप में, तो हीरो इज़ ग्रोइंग दिस ईयर ऑल्सो इन मुंबई. एंड हमारे यहाँ पे कस्टमर फ्लो और कस्टमर का जो मॉडल डिमांड्स है वो अच्छा है. स्कूटर 125 सीसी में कस्टमर्स का अच्छा मूव हो रहा है, बिकॉज कस्टमर स्मार्ट बायर हो चुके हैं. कस्टमर्स को पैसा भी लिमिटेड खर्चा करना है, उनको चीज़ भी अच्छा चाहिए, तो वो लोग अच्छी चॉइस कर रहे हैं. 125 सीसी में अच्छा आ रहे हैं. ईवी में जो हमारा नया ब्रांड है वीडा, उसमें भी उनका अच्छा परचेज हो रहा है. सो ओवरऑल जो फेस्टिवल का जो आउटपुट है वो अच्छा है अभी तक. और हमें जैसा कि अभी न्यू ट्रेंड है कि वो लास्ट मोमेंट तक होता है ज़्यादा, क्योंकि सब जन क्रिकेट देखते हैं तो पावर प्ले खेलना पसंद होता है सबको. तो मेरे को लगता है लास्ट 5 डेज़ में ये into 3 into 4 होगा वापस.
अच्छा.
All right. In fact, with that, it is a wrap on the big story. And thank you very much, Pallavi, for joining us this evening.